Chapter 6, Organization for Finance.
Good day, ma'am. I am Jeneriel Cagas, a Bshm 2B. For this presentation, I will be present at Chapter 6, Organization for Finance.
Inasmuch the primary purpose of a business enterprise is to make profits, the handling of the firm's finances is therefore extremely important.
Money is needed to start a business. It is needed when the business is in operation, and it is needed when the business is expanding. Capable handling of finance provides money for these three purposes as it is needed.
The financial function refers to the actions taken to obtain and manage financial resources with the goal of making a profit. It generates pertinent financial resources and data that help other business operations, planning, and decision-making processes run more efficiently. The Chief Financial Officer may be called Vice President for Finance, or Treasurer or Comptroller depending on the practice of the corporation.
This Chief Financial Officer handles cash, bank relations, credit, and quite often, the accounting function. He prepares or helps prepare the cash budget, the annual report to stockholders, and payrolls or confidential payrolls. He reviews contracts involving financial matters and the ownership, sale, or purchase of property.
In that case, the Treasurer handles external finance while the Comptroller handles internal finance. Thus, the Treasurer arranges the insurance of stocks and bonds, handles the acquisition of short-term loans, furnishes the information required by banks, and advises on the various means whereby the company could raise funds or borrow money.
On the other hand, the Comptroller would handle the departments taking care of bookkeeping, accounting, cost accounting, credit and collections, and statistics.
The Chief Financial Officer looks for sources of capital. The capital needs of a company may be divided into fixed or investment capital consisting of land, buildings and equipment, and working capital for raw materials, salaries, wages, and other operating costs. The capital pool, savings and investment, financing the non-corporate enterprise, sole proprietorships and partnerships, other private business and government enterprises.
Savings are generated directly and indirectly by individuals, business enterprises, a variety of institutions, governments, and others. The market is a network of many institutions, channels, and processes distinguished by the sources of their funds, by the different areas they cover, by the different types of loans they make, and by the variety of borrowers they serve.
Initial corporate financing refers to the actions and business dealings involved in obtaining money to start, grow, or buy a company. It is directly connected to business decisions that affect finances or money. It might be seen as bridge connecting the organization and the capital market.
For instance, there are construction bonds, improvement bonds, equipment bonds, reorganization bonds, general bonds, and others indicating the purpose for which they are issued.
Financing day-to-day operations. Once a business is started, the money requirements of the company are continuous for goods, wages, and other expenditures of a going concern. Everything a business does results in money coming in or going out and in property being bought or sold. Cash position. There should be enough money available to pay every obligation when it is due.
Such money, except for initial capital and subsequent expansion, should come from cash sales and from collection of amounts receivable.
The cash position of a company is the amount of money on hand or in right in relation to the total sum of accounts payable and notes payable coming due during the same period. The main sources of cash should always be from sales. All other sources should be regarded temporary and to be resorted to only when income from sales is at the moment insufficient for immediate cash requirements, not at any time without careful consideration as to what may be the consequences.
Money borrowed must be paid. Capital should not be wasted but conserved.
Whenever a proposal to spend money is presented to the treasurer, his first question is it necessary? followed by can we spare the money? And then if we make these commitments, what shall we have to do without? That is why business have treasurers to look after their money. Financing seasonal businesses. Quite a number of businesses are seasonal in nature.
For instance, is a highly seasonal business, and unless it is located in a high area or in a tourist spot or beach resort territory, it does no business during the rainy season.
The different functions of banks. Banks have two functions. They act as a middleman between savers and investors, that is, between the supply of and demand for capital, and they supply the principal means of payment in modern community bank credit. Financial institutions. Banks can really facilitate the savings investments process by performing one or more of the following general functions. 1. Gathering, disseminating, and using information. 2. Purchasing, holding, and selling securities. 3. Providing diversification and insurance against risk of receivers and depositors. 4. Increasing liquidity to those who part with money and hold other claim securities. And 5. Explain the different kinds of credit. Short-term financing traditionally is used for seasonal purposes, for example, to build an inventory. A. Trade credit. Normal credit forms extended to firms by their suppliers. B. Secured borrowing. A secured loan involves borrowings against accounts receivables, inventory, machinery, equipment, vehicles, construction, buildings, or a contract type. C. Unsecured borrowing is simpler and is also known as a personal loan. You commit to make consistent payments until the loan is repaid in full, including with any interest due from a bank or other lender you borrow money from. Interest rates on unsecured loans are frequently higher because your home isn't used as security. D. Paper and notes. Short-term money is also available through two-name or three-name paper of various types. 1. Acceptance financing. Acceptance is a type of short-term credit agreement that consists of a written order from the buyer to the seller stating that the buyer will pay the seller a certain amount on a certain date and that the buyer will honor the obligation. 2. Commercial paper. Short-term unsecured promissory notes issued by companies. A. Captive financing. An automaker's or retailer's wholly owned subsidiary that offers loans and other financial services to such businesses' clients. Retailers can get store credit cards from captive finance businesses, along with full-service banking services like multi-year vehicle loans. Intermediate-term financing depend on large measure upon predictions of the business climate, company operations, and cash flow. Leasing. A lease can be either a finance lease, not lease, operating lease, true lease, or leverage lease. Long-term financing. The longest-term financing is with equity, which occurs when investors turn over cash in return to a part ownership in the company. A. Debentures. Businesses can issue a marketable security to secure long-term funding without putting up collateral or reducing their equity. An example of a long-term company loan without collateral is a debenture. B. Bonds. Off-back financing refers to financing which does not appear on a balance sheet.
For example, a relatively strong corporation may guarantee the indebtedness of a subsidiary or a weaker company with whom it has a business relationship.
Petty cash. Although the company usually uses checks in paying bills and most other items, it is necessary occasionally to make small payments by cash.
For this purpose, a certain sum of money is entrusted to the cashier sufficient to take care of ordinary cash requirements.
Paying for good purchase. When the company buys goods from others, it receives a bill or invoice for the good purchase. Maintaining bank balances. The minimum sum of money a depositor must have in their account to avoid certain fees. There is no set minimum maintenance balance requirement. It may differ between banks and may differ for various account categories within the same bank. Estimating cash requirement. There are already known factors of expense which help determine cash requirements. These requirements may be 1. For employee payroll. This is one of the first routine expenditures of the company. Payrolls have to be met every week or every 15th or end of the month.
Payrolls have to be met every week or every 15th or end of the month. Payday comes regularly and the employees and workers are to be paid without delay. Payrolls may be in three forms, namely the regular salary, less the hourly wage, and the base rate.
2. For utility service. The usual utility services telephone, telegraph, light, power, and billed and paid monthly. These cash requirements can more or less be routinely predetermined. 3. For current purchases. Next are the invoice purchases. If the treasurer is consulted before proposed purchases are consummated, he will know in advance when the invoices will be due and can plan accordingly. And lastly, number 4. For non-routine expenditures. Unusual expenditures such as the purchase of special equipment or items that may amount to more than the stated sum must be planned for. The company commitment. The connection that employees have with their company. Employees that are loyal to their company typically feel a sense of belonging, a sense of understanding of the company's aims, and the connection with their company. The budget. A budget is a financial plan that projects future earnings and costs. A budget, put simply, forecasts future spending and saving in addition to anticipated income and expenses. The budget is a statement of objective in terms of its specifications. Purposes of budgets. Stated briefly, the purposes of budgets are number 1, planning. A systematic and unified plan of activities for periods of operation. Number 2, control. A standard of measurement of results against variations from previous plans become evident. And lastly, number 3, coordination. Activities become a part of a plan for enterprise as a whole. Protecting the securities of the company. Some banks even provide conference room adjacent to their deposit vaults. No one but the treasurer or his deputies has to the box or knows what is in it. Managing the real estate of the company. If the company owns real estate, the treasurer must see that the taxes are paid when they due, the rents collected if there are tenants, repairs made, when insurance taken out and renewed, and the making of improvements properly supervised. Pay taxes when due. Payments of taxes due on the properties should not escape the attention of the treasurer. See that rent are collected. Some tenants are up to date in the payment of rent. However, there are usually some who delay the payment for one reason or another. Maintenance of the property. When repairs are necessary, these should be made promptly. If the property used in company operations need repairs, there is the possibility of accidents to employees or damages to other property. Insurance protection. Adequate insurance on the properties of the company is another responsibility of the treasurer. Insurance protection is not incidental on the operation of a business, it may be vital. In carrying insurance for the company's properties, the following considerations shall be taken. First, comes a survey of the risk that the company faces. Second, a survey of the possibility of reducing these risks by the fire or accidents hazard. And third, comes the analysis of the insurance available. Fourth, the procuring policies that cover the risks against protection is desired. Last, but by no means least, is the renewal of insurance policies before their expiration leaves the company unprotected.
It is not realized generally. For example, that all fire insurance policies take effect and expire at noon. What would be the position of an insured whose policy expired at noon if in the afternoon that day a serious fire occurred? For that matter, when is noon?
Property insurance may include fire, earthquake, flood, or theft insurance. Sometimes the insurance is divided into coverage against physical hazards such as fire, lightning, storms, and similar forces, and coverage against moral hazards like dishonesty, theft, embezzlement, insanity, sabotage, and other risks are psychological or mental in nature. Uses of credit information in the Philippines. Our financial system now operates on the basis of huge amounts of information concerning large and medium-scale business units, governmental units, domestic and foreign, and many other institutions that are actual or potential participants in financial markets.
The basic data come from many sources. Published balance sheets and profit and loss statements, reports to the Securities and Exchange Commission and other regulatory government agencies, reports to stock exchanges, special investigations, and so on.
The best management in the world would be helpless without reliable information about its business, not miniature but expressive data. The lender wants to see reports firsthand to be assured that they fit into the corporation's overall objectives and represents a simple, manageable picture. An accounting firm can provide valuable assistance in the process. Information sources on financing opportunities. Number 1, short-term borrowing. Most important source and possibly on loans up to 10 years is the company's bankers. 2, useful. Up-to-date information on long-term borrowing may be obtained from the corporate finance department of any money center bank or from a similar department in the office of a major original broker. 3. Advice on the placement of equity is available from members of the underwriting fraternity. And lastly, number 4. In the area of background reading, excellent practical and occasional papers are disseminated by leading banks and underwriters. 5. Explain fully the differences between stocks and bonds, one reasons why one and not the other is issued, and how there is regulated. Bonds are evidence of debts. Stocks are evidence of ownership. That is the basic distinction. If you buy a bond, you become creditor of the business corporation or government that issued one bond. If you buy shares of stocks, you become a part owner of a business enterprise.
It is necessary only to determine whether one provisions of the issue establish a creditor relationship by a pay interest or repay principal at some future date. If there is such a promise, it is a bond. If not, it is a stock.
For stockholders, on the other hand, the right to vote for directors on certain major questions of corporate policy is an inherent right of ownership. An important factor which could favor the flotation of bonds rather than the insurance of stocks to raise capital is the high corporate income tax structure.
However, the principal danger in debt financing is that interest must be paid even in years of depressed business, whereas dividends on stock can be skipped.
On the other hand, it should be said that since bonded indebtedness is fixed in monetary terms, its real burden diminishes with inflation while simultaneously reducing a corporation's income tax liability.
In this situation, equity or stock financing would leave a permanently expanded number of shareholders.
The SEC requires full disclosure of all the pertinent facts about any company before it makes a public offering of new stocks and bonds. The company must file a lengthy registration with the SEC in which it sets forth the data about its financial condition, its assets, and its liabilities. If the data appear to be complete and honest, the SEC gives green light to the new issue, but this does not mean that it passes any judgment whatsoever on the quality of the securities. The SEC also sees that the information which is filled with it is available to any possible buyer of the new issue. The complete prospectus can be published, but barring that, the only other kind of advertising that can be used is the so-called tombstone, announcing in which information is provided beyond the name of the issue, its price, size, and the names of the underwriters and dealers who have it or seal.